Welcome back to the channel. Today, we are looking at a dual-engine market dynamic. In the East, the Indian market is witnessing unprecedented internal structural shifts and an explosive domestic rally. In the West, Wall Street is grappling with massive corporate valuations, a multi-billion-dollar corporate debt wave, and a critical policy pivot under the potential leadership of Kevin Warsh at the Federal Reserve. Over the next 10 minutes, we will break down exactly what this means for your portfolio from Mumbai to New York. Let us begin in India, where the bull run shows zero signs of fatigue. The benchmark Sensex surged by 544 points, while the Nifty 50 closed at the doorstep of the crucial 24,000 mark. This rally has been propelled by heavyweights like Bajaj Finance and TCS. Despite persistent global headwinds, domestic liquidity continues to act as an iron shield for Indian equities, proving that the local growth story is fundamentally anchored. But there is a far more complex story playing out beneath the surface of this Indian rally. While headlines often point to foreign institutional investor sell-offs, a deep analysis reveals a massive $200 billion FII shift hiding inside the data. Foreign investors are not simply abandoning India, they are aggressively restructuring their portfolios, rotating capital out of bloated, overvalued sectors and moving it into high-growth mid-caps, defensive pharmaceuticals, and infrastructure plays. Understanding this rotation is the key to identifying where the next wave of wealth will be created. Turning to Indian corporate tech giants, Wipro has made a massive move by opening an artificial intelligence center dedicated entirely to Anthropic's Claude model in Bengaluru. This strategic partnership positions Wipro at the very forefront of enterprise AI adoption. By leveraging Claude, Wipro aims to deliver tailored generative AI solutions directly to its global clientele, demonstrating that Indian IT services are rapidly evolving beyond traditional maintenance and into cutting-edge cognitive architecture. This tech push comes as domestic mutual funds continue to absorb any selling pressure from foreign institutions. Retail participation through systematic investment plans, or SIPs, has reached historic highs. This steady flow of domestic capital has changed the structural mechanics of Indian capital markets, making them far less vulnerable to global shocks than they were a decade ago. It is a fundamental democratization of Indian wealth. Now, let us cross the ocean to the United States, where the macroeconomic outlook is undergoing a critical regime change. According to the latest CNBC Fed survey, Kevin Warsh's prospective Federal Reserve is not expected to make any immediate changes to interest rates. Analysts are projecting a prolonged pause as the central bank assesses sticky inflation and a resilient labor market. This wait-and-see approach marks a distinct departure from previous aggressive rate cut expectations. As Treasury yields react to this hawkish pause, Wall Street remains highly sensitive to forward guidance. With Kevin Warsh expected to bring a more market-driven, disciplined approach to monetary policy, institutional investors are locking in yields now, anticipating that rates will remain higher for longer. This shift has triggered a reassessment of equity valuations across tech and interest rate-sensitive sectors. In the commodities market, we are seeing dramatic movements as crude oil falls below $80 a barrel. The primary driver is optimism surrounding a potential United States and Iran diplomatic agreement, which is expected to unleash a significant wave of supply onto global markets. This drop in oil prices offers much-needed relief to energy-importing nations, particularly India, which relies heavily on external crude to power its domestic economy. Switching over to major corporate developments, SpaceX has achieved an extraordinary milestone, surging past Microsoft in market capitalization to become the fourth largest company in the United States. Following its high-profile public offering, retail investors have been left with a difficult hold-or-sell decision due to limited share allocations. This massive valuation leap underscores the market's insatiable appetite for aerospace and satellite communications dominance. In the semiconductor space, Nvidia is preparing a massive capital play. The artificial intelligence chip giant plans to raise at least $20 billion in its first major debt sale since the start of the current AI boom. Despite possessing a massive cash reserve, Nvidia is taking advantage of liquid corporate bond markets to secure cheap long-term capital, ensuring it has the financial firepower to secure supply chains and fund next-generation R&D. Meanwhile, the fast food sector is undergoing its own consolidation. Yum Brands has officially agreed to sell its Pizza Hut division to private equity firm Long Range Capital and Yum China for $2.7 billion. This divestment allows Yum Brands to streamline its corporate structure and focus core resources on higher-margin growth engines, while giving Pizza Hut a localized operational structure to revive its global brand presence. However, global inflation concerns have not completely vanished. European Central Bank officials have warned that supply chain pressures and domestic wage growth mean inflation remains embedded in the economic pipeline, despite the relief in energy costs from the Iran deal. This divergence between easing commodity prices and sticky service inflation represents a complex puzzle for central bankers worldwide. As we synthesize these global and domestic trends, the divergence is clear. India is capitalizing on structural domestic growth, strong local investment, and strategic AI integrations like Wipro's Cloud Center. Meanwhile, global markets are navigating high valuations in the US tech sector and a cautious Fed transition. For investors, the playbook remains clear: focus on robust cash flows, monitor domestic liquidity, and stay positioned in sectors showing structural strength. Thank you for watching. Make sure to subscribe, hit the notification bell, and leave your thoughts on the FII shift in the comments below.